Okay, then let's take a look at MACD and using it to look for what we call divergence. Now, it's a technique that we can use in conjunction with indicators. It can be used along with the RSI, for example, or it can be used on its own, and what we can do is we can see where we're going to get potential reversals in the market. Now, divergence is not an indicator on its own, it's just something that we use, as I say, to see where we are having a potential slowing of momentum or a loss in momentum and a reversal in the market. So here we can see we've got the histogram, and as I've mentioned before, it very closely follows the actual direction of the trend. You can see there that we're making lower lows on the histogram and we're making lower lows on the trend. Again, it moves up and it moves up and it moves up right here. You can see that it's actually following the general pattern or the trend of the market. Okay, now it's when you can see here up, down, up, down, up, down, up, down, it's following the trend. Now it's when we actually see that it doesn't follow the trend of the market, and that's what we call divergence. So let's take a closer look, and I can give you an example right here. If we just draw a line right here, now we can see that if I draw a line here across these bottoms right here, and I draw a line right here, down here, what we can clearly see is here we are making higher lows, and here what we're doing is we're making lower lows. So there is in actual fact a change in how the histogram is reacting to the actual trend. It's not following the trend in this particular example, it's going against the trend. Okay, so we can see, as I say, if we take a look right here, this point right here, this point right here, and this point right here, if you look at that, these are looking at these points right here. Here we can see lower low points, and here we can see higher high points. So we've got a divergence in the market. So what we do is we simply draw our trend lines to confirm this. We've got the trend line. We can draw the trend line right here across these bottoms here, and you can see now then what we've got is we've got what we call a divergence in the market. When this trend line, this particular trend line here, is moving up, this is what we would call bullish divergence. Okay, so we can expect the market to go from a short direction to a bullish direction, and that's exactly what it does here. It goes from being in a bearish move to a bullish move. So when you see that the market is opposite on the histogram to what the actual trend is doing, we can see, again, remember we're looking at this is making higher lows, whereas the actual market is making lower lows. This identifies divergence, and if you draw this particular line, I'm just going to remove these again, if you draw this line right here, and let me highlight this line that I'm talking about, this line here, if it's in an up direction and we have a down direction on the actual chart, this line is an up direction, and therefore this is bullish divergence, and therefore we can expect a reversal, possible reversal in the market from bearish to bullish. So bullish, here we have bullish divergence from on the charts. We're going from bearish, because it's a bullish divergence, we can expect a reversal going from bearish to bullish. Okay, now I've actually got a chart that you can download. You'll see it in this particular section. Download, pin it on your chart, and it's a chart which will help you identify when we're looking at bullish and bearish divergence. Okay, so now let's take a look and see if we can find some bearish divergence.